Good afternoon, everyone, and welcome to another Melbourne's North Food Group webinar series on government grants. But firstly, I would like to acknowledge the traditional custodians of the various lands on which we work on today and the Aboriginal and Torres Strait Islander people participating in this webinar today. I pay my respects to elders past, present and emerging, and recognise and celebrate the diversity of Aboriginal peoples and their ongoing cultures and connections to the land and waters of Victoria. So good afternoon again. My name is Margaret McClelland. I'm the General Manager of Melbourne's North Food Group, for those of you who I haven't had the pleasure to meet. We're very excited to be presenting this webinar today with one of our major partners of the food group and great supporters, Matthew Steer. So I'd like to welcome our guest speakers today from Matthew Steer, Gary Toomey. Hello, Gary.
Margaret, thank you very much.
Thank you. Tristan Glennon. Thanks, Tristan. And Richard Rath. Hello. So thank you very much for being here today. So we'll be speaking all things government grants and also upcoming grants that haven't been announced as yet, but apparently I hear on from very good sources that they're not that far away. So some of the upcoming, we can't tell you too much about just yet. So if you are wanting to know more, and it should be, I would be thinking in the next little while, but you know what they're like, please either send me a private chat with your contact details and I can pass them on to Gary to contact you. And also any questions that you may have today, please use the chat function and we will ask any questions that you may have after the presentation. So without further ado, please, ladies and gentlemen, please welcome Gary Toomey. Thanks, Gary.
Thank you very much, Margaret, and look, thank you very much for the opportunity to do today's presentation. As Margaret mentioned, I'm from a firm, Matthew Steers, and we have a dedicated group within the firm now that's focused on assisting businesses to apply for government grants, to get government assistance to support their research and development and their business growth opportunities. The opportunities we're talking about today are a cross-section of grants that are around, so we won't be covering every particular government grant at a state or a federal level that's around. The ones we'll be focusing on today will be the ones that over the past decade or more that we've been involved in this particular area, we've found to offer the most assistance to businesses in terms of the sorts of activities they need to undertake to develop new products or services, to buy new plant and equipment or to expand their manufacturing capability. So it'll be quite a targeted presentation today, but as Margaret mentioned, we're very happy to have any further discussions with you about other opportunities that you're aware of that you might like to discuss, and we can give you our feedback and our views on those particular opportunities. But just before we do launch into the presentation, I'd just like to give a very quick background in terms of Matthew Steer, our firm. Look, we're a 10-partnered chartered accounting and business advisory firm. We have over 30 years experience in providing accounting and business advisory services. And as I previously mentioned, we now have a dedicated team within the business that's focused purely on assisting businesses to gain access to government grants and government funding programs. And that's Richard and Tristan and myself. That's our sole focus. And so we're very happy to talk to any businesses that have any questions in that particular area. And just in terms of our background, we have a very high success rate actually in terms of accessing government funding. And look, we've secured, it's probably closer to 400 million plus in terms of grant funding and incentives across business development, capital equipment, research and development, product commercialisation and export market development. Now, that's over an extended period of time. It's certainly greater than 10 years. So I'd like to be able to say to you that we've accessed that much funding in the last 12 or 18 months, but it's not the case. It is over an extended period of time, but it is still a substantial amount of funding that we've been able to access for businesses. Tristan, could you go on to? So the programs we'll talk about today, as I mentioned, the key programs that we've found to offer the most assistance to businesses in terms of the activities that they want to undertake to develop new products or to expand current operations. The first section will be on specific grants for manufacturing expansion. Now, as Margaret mentioned, the programs we're going to talk about today haven't actually been announced as yet. There'll be one program at a state level and another program at a Commonwealth level. And we'll be talking about those grants in terms of what were available in the prior rounds. But certainly it is our expectation that they will be open for new applications in the coming weeks and months. So, and again, as Margaret mentioned, if you'd like to be kept informed, I'd be very happy to contact you and let you know when they are actually opened up. The other program we'll talk about is the R&D tax incentive program. It's a very large program, and any business involved in research and development of new products or processes and services should really be looking at accessing that particular program. The Export Market Development Grant program, that program's undergone a major change in the last 12 months. And there's been a lot of press, some of it not so positive about the program in recent weeks. And I'll take you through a little bit of the background to it. We still see it as a major opportunity, and companies we've worked with have done quite well out of it in terms of accessing government support to help them move into export markets. And then the last program that we'll talk about is called the Entrepreneurs Program. It allows businesses to access a grant to engage external providers to help them with their business planning, business strategic development, maybe even export market planning development. So it can be used for a whole range of activities, and it is quite an easy, straightforward program to access. So it's certainly one, again, that you should be aware of, and from time to time you may want to access that particular program. Tristan, we might just move on to the next slide. Okay, so as I flagged, the first part of the presentation is specifically focused around grants for manufacturing expansion. And today we'll cover off two of the key programs that we've worked with in the past to help businesses access funding. And there are a couple of other programs that I'll briefly touch on, but the two we'll focus on most today are the Business Competitiveness Program, which is a state government program, and then the Manufacturing Modernisation Fund, which is actually a federal government program. Now, the other thing I should just say at the start of the presentation, obviously we're in the middle of a federal election, well, just started a federal election campaign this week, and I think it's 38 days and counting to the actual election. The programs we'll cover off today have bipartisan support. Very important for you to know that, so that when we're talking about programs under the current coalition, these programs, Labor hasn't been in power federally for a little while, but traditionally it's supported these sorts of programs. And it's our experience that if there's a change of government, they may change the title of the program, they may tinker with the application process, but by and large, the actual core of the program stays in place. So I'm quite confident that what we're taking you through today, that in 2 to 3 months post-election, irrespective of who is successful in the federal election, that these sorts of programs will be available for businesses to access. Very important point to remember. Well, look, the first program we'll focus on is the Business Competitiveness Program. Now, it's a Victorian government program, so obviously Victoria is not in an election phase at the moment, although they will be later this year, I think in November. Now, we're talking about this program as it was offered in round one, and round one was offered around this time last year. And we've heard that the second round will be offered at some stage over the next few weeks, but we don't have any definite timelines in that, and we'll have to wait for the government announcement on that. They're certainly very happy to let you know when it happens. But in terms of the way that this particular program has operated, and we expect it will continue to operate into the future, is that it offers grants between $50,000 and $500,000. And those grants are on a 33% government contribution basis. So as an example, if a business applied for a grant to spend money on manufacturing equipment, and that can include things like engineering design, fit out, commissioning, etc. And as part of this example, if the total spend was $1.5 million, they could potentially attract a government grant of $500,000 to help them through that process. So 33% of that costs. Now, the attraction of government grants, it's, to be honest, the best form of funding assistance that you can access. It's not debt and it's not equity. It's the government saying, look, we've seen your project, we've assessed your project across a whole range of different factors and compared you to competitor applications that are in the system, and we think your project has significant merit, and we're prepared to put this grant funding into you. And the beauty of the government is it doesn't expect a commercial position in your business. It does expect some outcomes though. It's obviously taxpayer money, and as a result of that, the government has wider community benefits that it likes to see to flow from your particular project. And the key one is that you must be able to demonstrate that by the government investing in your project and then you completing the project, that will lead to a substantial increase in employment in your business. So very early in the outset, when we talk to businesses about this particular program or any of the grant programs for manufacturers, one of the key things we always ask is, will it directly lead to increased employment? Because unfortunately, if you can't demonstrate that, then there's little benefit in you actually applying for the grant, because you just won't be competitive against other applications. I have to say that the employment flowing from the project, while direct employment is very important, you can also point to indirect employment as well, through supply chain, through contractor employment, that type of thing. So it's a combination, but it is the key measure that's used to assess eligibility for this particular program. The other very important point that I'll make just while we're talking about these grant programs for manufacturing, and we're not in a position to give you tax advice, so you need to confirm this with your own tax accountants. But as most of you would be aware, that the government introduced 2 years ago, actually, provision to allow businesses to claim 100% write-off for assets purchased in the year of the tax claim. So that if you actually purchased an asset before 30 June this year, it was installed and ready to operate, if your tax advisor agrees, you could actually claim 100% write-off against that particular asset. Now, importantly, that also applies to assets acquired under these particular programs. So that if you did get one of these grants and part of the money was spent on acquiring new plant and equipment, as well as getting the grant to help subsidise the cost of that acquisition, you can actually then, subject to your own tax accountant giving you advice, you could actually claim that as 100% tax deduction as well. So you can see we're in a bit of a golden period with these grants at the moment in terms of being able to take advantage of grant funding plus tax benefits as well. So hopefully it makes it a little bit more attractive in terms of going forward. Oh, Tristan, could you go on to the next slide, please? All right. So just in terms of this particular program, the sorts of expenditure that we were able to claim in applications we put in last year, and which were detailed in the guidelines that came out with the program, is any direct capital expenditure, so manufacturing, machinery and equipment. And the point that I'm often asked in relation to this, does it have to be Australian made? And the answer is no. There's no requirement for the capital equipment to be purchased from Australia. And in fact, sometimes there's some benefit in terms of acquiring, particularly food manufacturing, etc., where some of the best equipment in the world is unfortunately located in Europe, in the European countries. And if it can be seen that you're actually buying, the best of plant and equipment, that can be a positive in terms of your actual overall application. The other project related expenses, you can actually pick up non-capitalised expenditure as well. So things that are related to product and process improvements. So if you need to do a redesign of the way things are manufactured to accommodate the new equipment, if you're doing any prototyping to do some testing before you actually commission it, if you're evaluating and testing new products and processes, through the commissioning stage, through the early stage of getting it up and operating. And also importantly, if you need to undertake some supply chain capability development. So if you actually need to scope out, just with this new machinery that's coming in and may deliver a new product or a product with increased capabilities, and then you need then to explore how you're going to actually get that into the market via your supply chain. And that sort of cost is also eligible under this program. The other important part of this program is that if you need to alter your premises, if your facility needs to be fitted out or extended or whatever to accommodate the new plant equipment, you can actually pick up those costs. And if you actually need to train staff in the operation of either the new product or the new manufacturing processes that will follow, As long as that's external training, you can't claim any internal training costs, but if you have to pay someone in to externally come in and train, that's an eligible cost under this particular program. And also, again, if you need to engage any labour or contractors externally to help you with the project, and that can be through the design, can be through commissioning, installation and operation, those sorts of costs are also eligible under this program. So it's quite broad in terms of the eligible expenditure. And we worked on 2 projects last year. They were both successful, which was great. We're very happy with that. And the companies have been very happy in terms of the range of funding and the sorts of activities that they've been able to get support for going forward. Well, Tristan, could we move on to the next slide? Okay, so we're now moving up from the state-funded program to a federal program. And this is called the Manufacturing Modernisation Fund. Again, I'll say, even though this has been put out by the Coalition, these sorts of funds have been supported by Labor in the past. So we're very confident that, you know, post May the 21st, that these sorts of programs will operate. While this program hasn't been officially launched, in the budget 2 weeks ago, extra funding of $57 million was set aside for the fund. So it will definitely operate this year. And we expect that it will start to operate probably in the middle of the year, post-election. Once things settle down, we expect that there will be a round of funding advertised and companies will get the opportunity to put in applications. I have to say, one of the things that I should have mentioned at the start is with these particular programs, the application period tends to be quite limited. So typically the way the government works is that it will open up the grant program and say you now have 5 weeks or 6 weeks to put your application in. And it's a drop-dead application date. So there'll be no applications accepted after a set date. So the most successful companies we've worked with are those companies that have had an opportunity or a project already within their organisation thinking, well, we'd love to do this, but we just don't have the funding at this point in time to do it. And so a grant-funded program would really give you that opportunity to leverage up prior planning that you've done and the scoping that you've done to actually quickly move in and you know, take advantage of it. The other important factor to bear in mind with these government grants is that unfortunately they're never retrospective. So while sometimes some of the grant programs, the Manufacturing Modernisation Fund is one, where you can actually pick up the costs incurred from the date you lodged the final application. Other programs like the Business Competitiveness Fund only allow you to pick up costs from the date that you actually sign the agreement with the state government. So it is always best to have a project that you're looking to start 3 to 4 months out from when you lodge the application. You can certainly incur expenditure prior to then, but it won't be covered by the grant. The grant will only occur, you know, in Victoria's case, once you've actually signed the actual grant agreement. So just in terms of the Manufacturing Modernisation Fund, it's a little bit different to the Business Competitiveness Fund from the Victorian Government. It's focused on small and medium manufacturing businesses to adopt new technologies to enable them to scale up and grow and compete internationally. So whereas the Competitiveness Fund was all about manufacturing, buying new equipment, this particular fund is really about the adoption of new technologies, new plant and equipment. And as I mentioned in the outline of the prior grant program, if you can show that you're buying, you know, the world best in terms of equipment that's going to be put into your operation and allow you to, you know, increase your throughput, you know, reduce your energy consumption, increase the quality, the value add of the products that you're delivering, that's the sort of thing that this program is targeting. And so it's just a slightly different focus to the Business Competitiveness Fund. And also it's not necessarily, while it's focused on employment numbers, it's not as important as it is for the Business Competitiveness Fund. So, you know, these programs are always a little bit different, and that's where hopefully we can always add a little bit of value in terms of advising on the programs and what may be best suited to you in terms of the project that you have in mind. Now, the Manufacturing Modernisation Fund, it was run in 2 tiers last time, and we expect it to be run in 2 tiers this time. And I have to say, we actually put in, I think it's a little while ago that this was run, I think 18 months ago, but we put in 2 applications for this and we're successful with both of those as well. So we've got good experience with both the programs that we're talking about today. But it had 2 levels. One was for smaller grants, where you could get a grant of up to 100,000. And for these smaller projects, they actually cover 50% of the eligible costs. So on that basis, if you had a project up to $200,000, you could actually apply for this particular program and get a grant to cover 50% of the costs of that program. The application process for the smaller grants, as you would expect, was far less onerous than the bigger grants. So it was quite a good little program to access to get some funding for those smaller projects that you have in mind. Then grants for larger projects. And these grants can be quite substantial. They start at $100,000 and they go up to $1 million. But the actual grant amount drops back to 25% of the eligible project costs. So Tristan, could you go on to the next slide? All right, so to get the maximum grant of $1 million, you'd obviously have to spend $4 million of that amount. And then likewise down to 200,000, you have to spend around $800,000. So you can see the distinction between the larger grants and the smaller grants. But in terms of the eligible activities that can be covered under this modernisation fund grant, covers the buying, constructing, installing or commissioning of manufacturing plant and equipment or software. Now, software is a very important addition to this. So you can pick up where you need to acquire software for integration processes in the whole manufacturing process. That is an eligible cost under this program. It also places a lot of emphasis on relevant training and skills development to assist with integrating new technologies. And that reflects the fact that they're expecting you to buy state-of-the-art equipment, world-first technology, where they recognise that an important part of that's going to be that staff have to train up. And from their point of view, that's good because it's upskilling Australian manufacturing capability. And that's why it's so highly prominent in terms of the areas that they'll fund. And the other area that will be covered is the process design and engineering, but it all relates to the installation and commissioning of the capital equipment. So if you have to undertake design and engineering work associated with that, those sorts of costs are covered. And then, as we've mentioned previously, any fit-out alterations or extensions to the building directly related to the capital investment. Now, the other thing under this program, and Tristan, could you go to the next slide, please? Oh, okay. Just go back to this one. One of the other areas that is covered under this program, but not under the competitiveness fund program, is that you can pick up some internal salaries, some project management, internal salary costs of the company in actually delivering this project. And it's generally related to about 10% of the overall project costs, but you can actually put someone in the business in charge of the project and then claim their salaries under this particular funding program. So it's a great program. As I mentioned, it was definitely allocated funding in the budget, and we would expect that program will open up around the middle of the year thereabouts. And again, we're very happy to keep you informed about that. Well, we've now finished on the grant side of our presentation, and we'll now go on to the next area, which is the R&D tax incentive program. And while the grants programs, as we explained, are what we call a competitive-based program, where you put in an application and you compete with other companies that have actually put in applications, and the assessment committee determines on the merits of your application and on the selection criteria who's going to be eligible. The remaining 3 programs that we're going to talk about are what we call entitlement-based programs. So that as a business, if you meet the eligibility criteria, you document the work and the expenses correctly, and you put your application in, you are entitled to actually receive the government funding under this particular program. So there's a lot of certainty around entitlement programs. Whereas the competitive program, you put in your best case, unfortunately, it may not always be successful. But with these entitlement programs, you follow the process, you make sure you're eligible, you will be entitled. So you can actually build these programs into your planning, and the programs that you can move in and out of as necessary. So some years they may be relevant to you, other years they may not, but you know that they will be there and you can access them as required. Now, in terms of the R&D tax incentive program, It is the federal government's largest program, funding program to support innovation and product development across Australia. The program is agnostic in terms of industries, so any industry can apply for the program. You can apply from any state, so it's not limited to any particular state. The major restriction, though, in terms of accessibility that does catch out a lot of businesses, that you must be a company. It is not open to trusts, it's not open to sole traders, and it's not open to partnerships. So you must have a company that applies for the R&D tax incentive. And just to give you an idea of the size of the program, the last figures that I saw is that the government had foregone tax benefits of around $5 billion through companies claiming a tax incentive. So you can see it's quite a sizable program, and I think there's something like 13,000 companies Australia-wide that actually claim this program. So as I mentioned, it's the biggest program that's offered by the government. And the point that we always make to companies in terms of, product development and process development and service development, if you're not accessing this program, very likely your competitors are, and they're using the program to get funding to do their development and make them better competitors to you. So as a business, you should always be very, very aware of these programs and making sure that you're taking full advantage of them. Now, just in summary, the program effectively just provides a higher tax rebate for projects that deliver a new product or a process of improvement. You must be able to demonstrate, though, in those projects that you're undertaking innovation and experimentation. And one of the challenges that we find, and I guess it's one of the major inputs that we have to companies in terms of applying for this, is that currently the program is structured around what they call a scientific methodology. So what they're trying to say is that we only are going to support people that go through a rigorous research and development process. So you need to be able to demonstrate to us that you go through a process where you're looking to develop something that's new and innovative. It can't be simply customizing an existing product. It can't be just replicating an existing product. You must be bringing something new to the marketplace. And that to do that, you need to undertake substantial experimentation. And experimentation, as we all know, involves failure. So you need to be able to demonstrate that you've gone through a process, you're hoping to achieve an outcome, and while you're hoping to achieve it, you weren't necessarily sure of the process that you had to go through, and so you went through experiments and there were some failures and you had to recalibrate or redirect the work effort through the particular process. Now, the size of the actual tax offset or tax benefit that the company gets depends on their turnover. It's a two-level scheme where the best returns are available to businesses with an aggregated turnover of less than 20 million. And the aggregated turnover is the description that the ATO uses, where if you're associated with another entity, they actually aggregate your turnover into that total assessment. So it's very important when you're applying for this, if you're looking to get the maximum outcome from the program, that you check that your aggregated turnover is less than 20 million in terms of the benefits that can apply through. So just in terms of the eligible tax offsets, for instance, if your turnover is less than 20 million in the year of the claim, you're eligible for a 43.5% refundable tax offset. And from financial year 22, which is the current year that we're in, the offset rate is equal to a company's corporate tax rate plus 18.5%. Now, most companies with a turnover of less than 20 million at the moment would have a corporate tax rate of 25%. Some may still be at 26, but most companies would now be at 25%. So if you add 18.5% premium to that, that gets you to 43.5%. But it's now locked in that irrespective of the corporate tax rate, that companies with a turnover of less than 20 million will get that 18.5% premium. And effectively the way that works, and just always explain this to companies, is that if you have expenditure that relates to research and development work, and you don't bother to claim that under the R&D tax incentive, and you just claim it under normal tax provisions, you'll get the tax benefit as per normal expenses of 25%. That's the tax benefit. Your income will be offset by that 25% expenditure level. However, if you claim that same expense under R&D tax incentive, you'll get to claim that at 43.5%. So that's the difference. Rather than claiming it at the normal 25%, you'll get to claim it at the 43.5%. So it's quite a substantial difference, and we'll go through just the financial benefit of that shortly. However, if your turnover is greater than 20 million, you're eligible for a non-refundable tax offset. Whereas less than 20 million, you can have the offset refunded, and again, we'll go through that shortly. If your turnover is greater than 20 million, it's a non-refundable tax offset. And again, from financial year 22, the year that we're in at the moment, in prior years, the offset rate was for companies greater than 20 million was 8.5%. However, for financial year 22 onwards, that may increase up to 16.5%, depending on the R&D intensity of the business. And I won't go into a big description of what R&D intensity is, but effectively, it's the more money you spend on R&D as a portion of your total overall spend, the higher the offset rate that you'll get. So the government's trying to benefit those businesses that put more money into R&D. Now, just as an example, in terms of if your business is less than $20 million turnover in financial year 22, and just say that your company is in profit, which obviously everyone likes to be in profit, and your tax rate is 25%. So that for each, you'll receive a reduction in tax of $18,500 for each $100,000 of eligible expenditure. And that the calculation for that is as I've explained. It's the difference between claiming that expenditure at 25% as compared to 43.5%. The difference is 18.5%. So for $100,000, you're going to save tax of $18,500. Each $100,000 beyond that, obviously that 18,500 gets multiplied accordingly. Again, and if a company happens to be in tax loss, which no one wants to be in tax loss, but we work with a lot of early stage startup type companies or companies in the pharmaceutical area where they do incur substantial losses for a long period of time, they can actually convert that expenditure into a cash rebate, cash payment back. So that if they spend $100,000 in eligible expenditure, they'll get a rebate amount of $43,500 back, and again, multiply that out by each $100,000 of expenses. But the other point I always make to businesses about the tax benefit that does flow through is that if you take that tax saving, just for instance, we were talking before about saving $18,500 tax on $100,000 expenditure, that $18,500 goes directly to your bottom line. Now, how much revenue do you have to generate to get that sort of outcome to your bottom line? And please remember also that we're talking about expenses that you've already incurred. So it's not as though you have to spend more money to get it. It's simply a matter of you going through the process and lodging an application and getting recognition that the work involved in that. So they're the sort of things that you do need to bear in mind in terms of the R&D tax incentive. As with all government programs, there's a compliance issue with it you need to be very comfortable with. And one of the things we do is talk companies through record keeping and that type of thing because it's very important. But from a medium to long term proposition, you can see the benefits that can flow into the business. Now, just in terms of the eligible costs that you can claim under the R&D tax incentive, it's quite broad. So you can pick up salaries of staff involved in research and development. You can pick up contractors that you need to engage to help you with your R&D work. Any consumables required for the direct work associated that you're claiming. And consumables can be, inputs into testing a manufacturing process. It can be training, it can be travel, it can be software that's required to be purchased to support the overall testing. It can be a whole range of different things. But those things are claimable under the R&D tax incentive. And you're also able to claim eligible overheads as part of the overall claim. And we have a process that we go through with companies where we work out what our overheads are eligible. There's obviously some tax office advice in terms of eligible overheads. And then you need to be able to work out how you apportion those overheads and get them into claim. So that if you are ever audited or anyone asks for an explanation, you can actually provide details on how you arrive at that. So those are the 4 areas that you can look at to pick up under the R&D tax incentive. And also you can pick up depreciation on plant and equipment. Now, at the outset, I mentioned about your ability to claim instant asset write-off on purchase of assets that's currently in place, and the government's announced that it will extend into financial year 23. If you opt to claim your assets under instant asset write-off, you can't then claim it under R&D tax incentive. The ATO is quite firm on that, in that saying you're already getting a tax benefit by the instant asset write-off, and so we're not going to allow you to double dip and claim that under the R&D tax incentive. But if any of your plant and equipment was purchased prior to the instant asset write-off opportunity, or you, for whatever reason, you still decide to actually apply for normal depreciation rates, that depreciation amount can be included in the actual claim. Obviously, the assets need to be used in the R&D work that you're looking to claim. Tristan, could we go on to the next slide? So look, that's the R&D tax incentive. I'll just emphasise again, it's the largest program that the federal government offers. It's had bipartisan support now for over 30 years. While, as I mentioned at the outset, it may go through some tinkering if there is a change of government, you can be quite confident in the years ahead that program will be around. So I really do encourage you, if you are undertaking product development or looking to undertake product development, that you give serious consideration to applying for that particular program. Well, the next program that we'll focus on is the Export Market Development Grant Scheme. It's a program that some of you may have seen has had some press in recent times. The program has been around for 30 years as well, and it's had bipartisan support over those 30 years. And it's had a number of major external reviews by external consultants, and continually the reviews have come back saying it's a great program. It has been a major support to exporters, and the government should continue to support it because it delivers real benefits back into businesses. Back at the end of financial year 20, the government decided to make a major change to the program. And it has caused a little bit of controversy and a little bit of uncertainty. We think the changes are great, and we've worked with over 40 companies to access the new program, and we're finding that overall it's turning out to be quite a good program. Whereas the old program was what they call a reimbursement program, you incurred the expenses, and at the end of the year you made a claim, you put it in, and it went through an audit process, and if you were successful, you got reimbursement. So you had to pay the money out, you had to go through an audit process, and maybe some 18 months later, you would receive reimbursement for those particular expenses. The government, after a major review, decided to change that around and to turn it from a retrospective program into a prospective program. And look, there was a lot of uncertainty, and it wasn't that clear at the start when they launched the program at the start of financial year 22. But effectively what it means is that instead of putting an application in at the end of the year, you now put an application in at the start of the year, and you forecast out your expenses for that year. And then it goes through an assessment process. And if it's assessed in terms of being eligible, you'll then be offered a grants agreement. And that grants agreement will specifically state the amount of grant funding you will receive towards the end of 30 June in the same year that you'll receive, as long as you spend the money by 30 June. So putting a lot of certainty into the program. The controversy about it to date has been, it's been far more popular than what the government anticipated. The take-up rate's been far higher, and so the amount of funding around in this first year has been less than what they had hoped. Hopefully that's going to be addressed in going forward, but you know, certainly the grant funding's still there. It's just the amount of grant funding that's around. It's been a little bit smaller than what was originally hoped for. So that's a bit of background in terms of the changes to the program. Look, one of the important parts about this program, unlike the R&D tax incentive where it's limited to companies, this particular program is open to a range of different entity structures. So you can be a trust, you can be a partnership, you can be a sole trader. As long as you have an ABN, you're eligible to apply for this particular program. So far broader. And the turnover limit is 20 million, but it's not on an aggregated basis. So you can be a subsidiary company of a larger group of companies, and on the basis that you're doing research, you're doing export marketing activities, you can then lodge a claim for this particular application. So it's a great program. In terms of the expenses that you can claim under this program, if you have an overseas representative, so if one of your staff members goes overseas, is located overseas to market and promote on your behalf, you can claim their costs. Also importantly though, if you engage an external provider overseas, a consultant or a distributor even, to be your marketing representative overseas, and they charge you on a retainer basis, you can actually also pick up their costs under this particular program and get grant reimbursement for the expenses that you incur. Also, if you undertake short trips for marketing, both overseas and in Australia, and this is a major addition to the new program, and it's directly a result of COVID. In the past, you could only ever claim short trips and marketing visits overseas. But if you undertake a marketing visit in Australia now, so if you go to Sydney or Perth or Adelaide or Brisbane, and you're going there to attend a trade conference or meet with distributors or whatever, and that's focused on export marketing, or at least part of it's focused on export marketing, you can actually claim the cost of that trip under the Export Marketing Development Grant Program. Obviously, if there's a dual purpose of the trip, if it's both domestic and export, you have to apportion it. So you have to apportion the costs that relate to the export as compared to domestic. But it is a major addition to the program, whereas you don't necessarily need to travel outside of Australia now to claim expenses under this particular program. If you engage marketing consultants to help you prepare your export market strategies, develop market research plans, help with logoing, branding, those sorts of activities, you can pick up their costs under this particular program. If you want to entice a foreign buyer to come and have a look at your products or your facilities, so you pay for them to come across to Australia to visit your site, look at your products, you can pick up their costs. If you're sending free samples to potential buyers, so you have to send free samples for them to view and try before they buy, you can pick up the cost of those free samples. If you're attending trade fairs, as I've already mentioned, in Australia or overseas, or if you're undertaking advertising material in export markets. So the advertising material has to be focused on export, it can't be domestic export, you can pick up those costs. And I have to say, during COVID, during the last 2 years we've been working on these applications with companies, this advertising material has been the biggest expense they've claimed. They're doing all sorts of digital advertising, Google Ads, Facebook, LinkedIn, whole series of different areas where they're spending money. And people are spending quite substantial amounts of money to make sure they're maintaining their presence and developing their brand in overseas markets. And I tend to think that's going to keep happening, and that maybe people won't be doing marketing tricks themselves so much in the future, but relying more on these avenues to market and promote. So that's certainly claimable. Intellectual property rights, so patents, copyrights, trademarks, again, focused internationally, they're all claimable. And under the new program, where you have to train staff in export activities, you can actually claim those costs under the program. And one of the big developments under this program is that representative bodies have been able to apply for grants. And in fact, we helped Melbourne North Food Group to successfully apply for a grant under this particular program. And one of the things that they're looking to do is to provide export training courses, and Margaret will no doubt talk about that to members at some stage. But those sorts of training programs, if you did attend those programs and you did have to pay anything to attend those programs, you can actually claim those costs back under the Export Marketing Development Program. So it's a great addition to the program. Tristan, could we go on to the next slide? All right, well, the other major change to this particular program is that it now operates on a three-tiered model. And it's been broken out into tier one, which is usually equates to the first 2 years of a company applying. Whereas under the old program, you could never apply unless you'd actually commenced exporting. The program now allows you to apply where you're actually new to exporting and you're looking to develop your capability over a 1 or 2 year period. So you might be developing some branding, you might be developing a go-to-market strategy, or you may be undertaking training at the Melbourne North Food Group in terms of export marketing opportunities. You can actually apply for the grant now. And potentially you can get a grant of up to $40,000 a year. And these grants are on a 50-50 basis. So you have to spend $80,000 a year to actually get $40,000. As I mentioned, while the maximum grants are $40,000, in this current year, they've actually have only awarded companies a far smaller amount than that. I think the current amount being paid to tier ones in this current year is $15,000, but it's still a sizable amount of money for a company that's new to export. But hopefully over time, once funding settles down, that it will move closer to eligibility of that 40K a year. Now, tier two is structured for those businesses that are already out there export marketing. So they've already made a sale, they're already in existing markets. you still need to be able to demonstrate that you're expanding your marketing activities. So you just can't be saying, look, we're already selling, we're not going to do anything new in terms of expanding our market. You need to be able to say, look, we are looking to expand our market. We're looking to bring on new customers or go into new markets or introduce new products. We need this grant funding to help us. Under Tier 2, you can potentially get up to $80,000 a year, again on a 50-50 basis. So you'd have to spend $160,000 to get that $80,000 grant. So a sizable amount of money. Again, the grant amount paid this year has been far less than that, but we're hoping going forward that the amounts will start to increase to get up closer to that 80,000. And Tier 3 is the actual, I guess, the gold standard in terms of exporting. This is for companies that have been out there exporting, selling for a good period of time. They might be on the east coast of the US, or they might be in Italy or France or somewhere. And they decide, in fact, we actually now need to move to the west coast of the US, or we need to move to Canada, or we need to move to Middle East and North Africa. So you're doing a strategic shift in your marketing. It's not just another city on the east coast of the US. You're actually shifting across to the west coast of the US, or you're going over into Europe moving out of Italy and France into Germany or something, or the UK. So you need to be able to demonstrate a strategic shift in your marketing, and you can apply for a grant of up to $150,000 a year to support you in doing that. And again, while the grants have been far smaller than that this year, we're hoping that will return to those sort of levels in future years. One of the key requirements in terms of, and Tristan, could you go to the next slide, please? In terms of the applications, is that in the past you simply submitted an application where you listed your expenses and put that in, and it was audited. Under the new applications, you actually do need to include a market plan. And again, that's something we've been able to add a lot of value to companies with in terms of assisting them with that market plan, just to spell out exactly what they're looking to do and the returns they're looking to achieve. So that actually now needs to go into any application. Now, in terms of the application process, as I mentioned, it's actually now a prospective application. So applications for financial year 22-23, so from 1 July 22 to June 23, you have to lodge that application between 1 July and 30 November 2022. We're already now starting to work with companies to get their applications ready so they lodge as early as possible after 1 July. Once you lodge your application, you'll then be advised of your outcomes. We've got there from January to March, but what we found with the last round of applications that we lodged, particularly when we're able to lodge early in July or August or thereabouts, we're actually getting our outcomes in December. So we're getting advice in December that the application had been successful, your grant agreement will be coming. And so companies got certainty at a very early stage. Whereas companies that left their lodgements until the rush, which unfortunately a lot of companies do, to later to November, they didn't get their acknowledgements until February or March. So that was well into the financial year before they found out whether they were successful or whether they had their grant agreements. So look, we always encourage people to go early rather than later. It's in your benefit to do that. You'll get a lot more certainty in terms of knowing whether you've been successful or not successful. Now, the payments, depending on what tier you go to, our Tier 1 applicants have already received their payments or started to receive their payments in March. So the Tier 1s are always paid very early, and that recognises they're in an early stage, they need assistance. So the grant payments for the Tier 1s, most of them have already gone out. They've already had it banked by now. The payments for the Tier 2 and Tier 3 probably won't be happening until June or July, and more likely July into the next financial year. Now, as you would expect, once you get your grant agreement, it will say to you, look, you've been allocated this amount of grant. This is based on you forecasting you're going to spend this much money, and on that basis, we'll allocate you a grant. Now, you then have to report at the end of the financial year just how much you've spent to justify that you actually did spend the money that you said you would. And the companies that we're working with, they're all part of their grant agreements. We're all required to submit a milestone payment in August 22 this year, but if you apply for next year, it'll be August 23. So you apply in the period from July to November. You'll find out sometime between December and March whether you're successful. payments, depending on what tier you will probably start from March, you go through June or July 23, and then you'll put your expenditure report in August 23, justifying the expenses. Now, I think one of the things that people are worried about is if they get the grant and they don't spend the money. So it's very, very important that you're confident when you're putting the amounts in the grant application and before you sign off the agreement that you will spend that money, and that you keep the necessary records in place to justify it. Otherwise, there's a strong possibility, well, you would expect that you'll be asked to repay it because you didn't really run the contract. All right, so that's the Export Market Development Grant Program. As I said, it's a great program. It's gone through some major changes, but we think it's a very good program going forward. And if you're looking to export, certainly one you should be looking at. The last program we'll cover off, and I know we're getting a bit short for time, so it's a much shorter program. It's called the Entrepreneurs Program. Now, it's a great program. It's quite an easy program to apply for. And you actually have the ability to apply for a $20,000 grant on a 50-50 basis to assist with your business development activities. So that if you engaged someone to do a business plan for you, or a strategic plan, or an export market development plan for you, and they charged you, for instance, $40,000, you can get a grant back of $20,000 to cover that. And again, at Matthew Steer, we do a lot of this, both in terms of helping with the applications, but also delivering some of the services. So it's a great program, and very happy to talk to you about it. The eligibility for these are a little bit tighter though, and so you need to be very, very aware of it. That you must have revenue or expenditure between 1.5 million and 100 million. So the minimum amount that you need to have in terms of revenue or expenses is 1.5 million, and the maximum that you can have is 100 million. If you fall within that range and you've been in business for greater than 3 years, you're potentially eligible for this particular program. Now, this is probably a little bit more targeted than most of the other programs we've talked about, in that it does operate in specific industries, or is targeted at specific industries. Particularly, it's for advanced manufacturing, food and agriculture business, which obviously that most of you would be operating in that area, medical technologies and pharmaceuticals, mining equipment, technology and services, oil, gas and energy resources. So they're the specified industries that you must be operating in to be eligible to get a grant on this particular program. And look, one of the things I haven't mentioned in terms of the presentation today is food and agriculture business, food and beverage in particular, are very highly rated across all these programs. All the grant programs, all the governments at both state and federal level are very keen to support manufacturing and food and beverage. And I really do think post the election we'll see, in addition to these programs we've gone through, a whole range of other programs that will be particularly food and beverage companies will be particularly eligible to apply for. So again, please let us know if you'd like to be kept informed about these programs, and we'll certainly get out to you as they become available and let you know. I'm very happy then to talk about potential opportunities and how you go forward, how best to structure it. So we have now finished the presentation, and we're very happy to take questions. So I think Margaret has been checking the chat box, and hopefully we've got some questions, Margaret.
Yeah, thanks, Gary. And that was a great presentation. Thoroughly enjoyed it. And like you said, we were successful for the export marketing development grants, which we had never applied for in the past, which is obviously beneficial then for our members, for us to be able to do things so we can subsidise, different things for them, obviously with us being a not-for-profit. So we found that very beneficial, and really a much easier thank you, Mr. Toomey, for all the paperwork and the time that you and Tristan and the team spent. So I certainly highly recommend in that regard. We had a couple of questions. David Rose from Exquisine has had to leave, but I guess it wasn't really so much a question, it was more a statement. All very well to talk about increasing, employment, but will they help us to get people, and that's the thing on everyone's lips at the moment. They are struggling to get people. And, the government's constantly talking about jobs and so on, but, there are a lot of programs. So I will get Michael Acarino, who heads up our jobs division, at Northlink to contact David. And, you know, anyone, please reach out if there is anything in that space that we can assist with. Howie from Mrs. Tran's Kitchen has asked, I don't claim any R&D at the moment. And most of what we do is R&D. Will that then place me in a good position to apply? And by the way, if you haven't tried Mrs. Tran's dumplings, I tell you what, you've got to go out and buy them. I've never tasted a dumpling like it. And I hear that they have got an opportunity. This is like New Zealand selling Australia kangaroos. They're going to be selling dumplings into Shanghai.
Oh.
Amazing, amazing. So there's the question from Howie.
And look, I'll let Richard.
Yeah. So in terms of the potential for an R&D tax incentive plan, there it could quite likely be the major criteria is that to be able to register for any given financial year, you have up to 10 months after that financial year to lodge a registration with Oz Industry. So there's two government departments or bodies that govern the R&D tax incentive. There's Oz Industry, who look after the technical eligibility of the activities. So do they meet the criteria of being eligible activities? And the second one is the ATO look after the financial side of things. So is the expenditure eligible, and they provide the financial benefit through the tax return. So you have 10 months from the end of your financial year to lodge a registration for your activities in the previous financial year. So for 30 June last year, we've got a few weeks left to lodge that registration before the end of April. So there may be an opportunity to go back for some of you to last financial year if you haven't lodged an R&D claim in the past. Going forward, of course, we can look at what's happening in this current financial year and see whether there's potentially eligible activities and maybe prepare a registration for you there. The key thing is, Gary mentioned before, is record keeping around the R&D tax incentive, both on the financial side, but also on the actual R&D activities themselves. Have you recorded why there's a technical challenge there, what that technical challenge is, have you researched possible solutions, and have you tracked your proposed solution and experiments around testing that proposed solution? It's really important to keep that, because if you're reviewed, because it's a self-assessment program like your tax return, so if you're reviewed by either of those government bodies, they're going to want to see documentary evidence to address those criteria.
Terrific. Thank you, Richard. Appreciate that. And I hope that's helped Howie with that answer. Now, does anyone else have any questions? That's the only questions that we had in the chat box. I'm pretty sure you can turn your mic on. So
Margaret, I will just jump in. Sorry, there was one
Tristan,
question.
Please.
I'm not sure who it was from because it's just got a number against it. They did ask two questions. So one was to do with what's the required turnover to be considered if all other criteria are met. Now, this came up during the BCP, so the CapEx grants end of the discussion. The federal government changed their requirements a couple of times for their programs, but typically the Victorian government in the last round of the BCP, to be eligible for that, you needed to have a turnover of over 1.5 million, have been operating for more than 3 years. And actually, no, the Victorian one was either a turnover over 1.5 or to have more than 20 employees. So you had to meet that minimum threshold to partake that to apply for a grant under that program. So
Fantastic. Thanks, Tristan. Thanks for picking that up. Has anyone else got any questions at all? I'm looking to see if any hands are going up, but no, I can't see any. Oh, Sharad, please.
Margaret, how are you?
I'm very well. Good to see you.
Good to reconnect with you. I had a question for the team. Thank you so much, Gary and Tristan, for putting this together. It's been very informative. Really a confirmation question. We often work with a number of businesses on the agri side, so farms, for example. Food and beverage, agri-food in general is strategically the most important area for us too at Swinburne University here. We've also entered a strategic partnership here with Northlink, which is very exciting. Do agri-food and packaging come under that category of food and when you mentioned agri-food in general, where does that situate packaging in the priority areas, the 6 priority areas that you put on the slide?
Look, that's a very good question. If it was involved in manufacturing, the packaging was involved in manufacturing of a food or beverage product, I'd be fairly confident that would be eligible under the food and beverage area. Under the state government programs, they don't tend to be limited to food and beverage anyway. So if it was just generic packaging, you wouldn't have that issue. The federal government programs are tending to be more specific around the actual description of food and beverage. But you'd have to be able to show a connection to food and beverage. So if packaging was part of that whole manufacturing within the business, and they may be doing something to improve packaging of milk or yogurt or something, and they need a new plant equipment to do that. That's the sort of project that you can look at in terms of getting grant funding.
Sure. No, thank you. During COVID, we found that a number of packaging businesses that we engaged, they were very busy, and their problems were more on the lines of process improvement, not necessarily product, but how to improve the process, how to get better throughput, and so on and so forth, and ultimately, of course, impacting their end users. But I just found that quite interesting how a number of packaging businesses in the last 1 year alone engage with us. And I just wanted to make sure that as we continue doing projects with them, this information could be provided.
But there's an opportunity there not only for the competitive grants, but also for the R&D tax incentive. If they're doing process improvement in the manufacturing process, there may be an opportunity for an R&D tax incentive claim. So as Gary was saying, the competitive grants are competitive. You may not succeed, but with R&D tax incentive, as long as you meet the criteria, you're entitled to the benefit. So it's worth having a look at both of those.
Thank you.
Thank you very much, Sharad. We've got another couple of questions. What is considered to be a substantial increase in employment percentage of current staff base?
Yes. Look, that's a very good question. And look, it's one that you really do have to consider on an individual project basis or company basis. It's not so much necessarily a percentage increase as an actual increase. And there are some fairly rough rules of thumb that we use when we look at these sorts of grant applications, that certainly if you're going for a grant of 500,000 through the state government, it's our view that you'd always want to be looking to increase staff numbers, in excess of 15 or more. So it's not, obviously in terms of percentage of that business, that'll be an important consideration, but it's not a percentage increase, it's an actual increase in numbers. And the government, certainly at the state government level, they can have, and look, there's nothing in the guidelines, and I'm sure that it's only an indicative consideration from their point of view, but they can look at a grant and then divide the number of new jobs by that grant and see what the cost of the job is in terms of the grant. And so obviously the more value they're getting out of the grant in terms of increased jobs, the more competitive you are. So it really depends on who you're up against. And look, we totally take on board the first point about the lack of available staff, and it's very well for the government to encourage staff. But we have to remember these grants are focused on the future. And hopefully in 12 months' time, 18 months' time, that whole issue in terms of staffing and access to staffing pools, etc., will be in a different scenario. And I think that's where governments are looking. That hopefully over the next 12 months we get more people coming back into the country, and things will start to improve in terms of being able to access staff.
Oh, great, thanks, Gary. And yeah, let's hope that does improve, because it is certainly a huge concern with business at the moment around employment and the lack of talent. Another question here: if we have already paid in advance, now I'm probably not going to like the answer to this one, Gary, but I could be wrong. If we've already paid in advance for a machine, is it possible to apply for the grant, since the installation process will take a few more months?
Well, Tristan, you might like to answer this and give the news.
Oh yeah, you make me the bearer of bad news. Unfortunately, no. All these grants, because they're trying to essentially create new investment in the state or the country, they're only looking at funding programs that essentially wouldn't go ahead without the grant. And if you've bought a machine, if you've even put a deposit down, it essentially shows a commitment that you can purchase, install and operate this machine without government assistance. And therefore, they're not looking to fund those sorts of programs. And it works pretty much across the board, with the exception of the R&D tax is the only one these days where you can purely look back at what you've done. And even then, it always does require a bit of planning, forward planning. So all these grants, it's best to get the information in advance of what you're actually looking at doing.
And it's such a shame, Tristan. I hear so many of my members, same situation. And, you know, the advice I give to all of them, do not purchase a thing yet. Find out what you could be eligible for before you put that order in. And so many have been in that same situation, sadly. But, you know, I think everyone's wisening up now with it and, you know, looking into what is available before they put that payment or commitment towards that project or new machinery, whatever it may be.
And Margaret, I think that's a very important point to make. Look, it's our experience that post an election, that 12 to 18 months post an election, the number of grant programs, particularly for manufacturers, is increased quite substantially. So that we really expect over the next 12 to 18 months, obviously the programs I've talked about today, but also a number of other programs have become available. So as you've said, we really do encourage people, if they're thinking a little bit out in terms of the next 5 to 6 months and thinking they're going to do this or do that, consider the opportunities, and whether it's with us or with other providers, just see what's available to help them get access to government funding to support that.
No, that's great. And I would encourage everyone, you know, it's a matter of picking up, you know, the phone to Gary and the team and asking the question. And I think that's really important, and could save, you know, an awful lot of money, you know, down the track. So now I'm mindful of the time, and I thank everyone for being here and taking the time out to join us today. I can't see anyone else with their hand up or a question.
Sorry, Margaret, there was one more from earlier. It just asked the question of, is the R&D with your existing accountant? My interpretation of that is, you know, does your existing accountant, can they do the R&D claim sort of based on like the information that's just in your, like the P&L that you might send to your accountant? Most accounting firms, I'd say the majority of accounting firms wouldn't have dedicated R&D capabilities. It is separate to your standard compliance. It does go through with your actual tax return. So the information, like the outcomes of an R&D claim, do form part of your tax return, but not all accountants are R&D tax. R&D tax incentive specialists. It's a different capability.
Great, thanks, Tristan. Okay, well, we might close off now, guys. Thank you, Gerard. My absolute pleasure. Lovely words. Thank you. And 61419. I'm glad that Tristan picked that up too. She's just said thank you for picking up her question. So, guys, thank you so much again for your time. I hope you learned some new things regarding the upcoming and the current grants that are available. I'm always available, so please pick the phone up or email me any questions you may have. And we will see you all very soon. We have got an event coming up on the 27th of April. If you haven't already booked for a networking event at Co-Conspirators, one of our members who's opened up a fabulous new brewery in Brunswick. So I'm not sure how the numbers are going, but if you have trouble, give me a buzz. But thank you everyone again, and we'll see you all very, very soon. Thank you.
Thank you.
Thank you, Margaret.
Bye.
Thank you.